password key is ODI2021. Please keep that in mind, keep a note. It will always be the same password to enter these various sessions. We begin today with our keynote speaker, Mike McCully, discussing a global dairy market. We will now speak to Mike.
Well, thank you, Steve. Good morning, everyone. It sure is my pleasure to be here, at least virtually with you. I think, like most folks, look forward to the day where we can be back in person and doing this, and seeing each other and talking and meeting. And I think we're getting closer to that every day. But until then, we get to utilize Zoom and other technologies. What I want to do here today is share some perspectives from my background on talking. The title is Thinking Big: A Global Dairy Market. And let me, as I pull up my presentation here, what I want to talk about is some of the things that I see with global dairy companies, global food companies, as well as I'd say just in general, what we see from, I say consumers. And I think, let me check real quick, is that showing up here? If Steve or someone can give me if it's showing up as a screen share, there we go. That should be okay. Unless I hear otherwise, I'll get moving here. I think as we're going to start, we'll talk a little about what's going on here in the U.S. And in general, we see milk supply is growing, but demand's also growing, which is a positive. But there's only so much that the U.S. demand can grow, and it really does highlight the need for the U.S. to grow exports and over time, and ideally, gain global market share. For those of you that follow this closely over the last decade or more, the U.S. has increasingly become a global player in some of these export markets, whether it's cheese, milk powders, whey products, and other dairy products, which is definitely a positive thing. And if you look out over the next 5 years, 10 years or more, really the U.S. is well positioned to continue to grow where maybe Europe or New Zealand or some other countries aren't really able to grow much more. So that we do definitely have a good opportunity here. One of the, and I'll talk about some challenges as well as opportunities. One of the things that I believe the U.S. dairy companies will need to do is to invest more in innovation. That's probably, admittedly, an area that the U.S. In general is probably behind in. There's some good examples of dairy companies that are good. But then there's others that have some room to improve. So we'll talk about a little bit more here, particularly given some comparisons to dairy companies competition in Europe, New Zealand, Australia, and not just only dairy, but competitors to dairy, plant-based, cellular, and other things like that. Like I said, big opportunities. You've got huge populations of people outside the United States, and there's just almost endless possibilities in terms of growth, whether that's in Asia, maybe looking forward to Africa in decades out. But there are a number of challenges, and I think one of the more serious ones is one that is not really talked about very much in most forums because it's not maybe something that hits today. But longer term, this is a problem, and really what it is the U.S. is behind in free trade agreements, and any sort of it's called basically market access is going to be a problem longer term, and this is really a risk when we talk about some of the key countries and regions, and I'll share that with you here in a few minutes. Unfortunately, the United States hasn't really done a lot of work over the last decade or so in free trade deals, and like the hope was a number of years ago that there would be a World Trade Organization, and that you would have global trading rules that everybody would follow. Instead, what we've seen is more bilateral deals between countries or blocks of countries that basically lock or block people, other countries out, and that's unfortunately the U.S. is behind on that. Sustainability is a topic that's increasingly important for everyone, obviously, but that's specifically for dairy. And I would say who's really driving this would be, it's consumers and activist groups that are putting pressure on global food companies to do more. And you've seen that with some of the big companies coming out with net zero commitments. And I think you'll continue to see that moving forward. Again, critics will point at dairy to say that kind of behind on this, need some more work, and we'll talk more about that as well. And I don't want to wander off in the woods here too much, but there are some problems with the U.S. milk pricing system and federal orders that, frankly, can and will impede innovation and export competitiveness. Just finished a study here recently that highlighted some of those things. But again, I don't want to dwell on that too much. And I think overall, what you'll see me talking about, or hear me talking about here over the next few minutes, will be, I think, is a good setup for the rest of your program. And what I want to do is kind of present some of these ideas, and I think you'll be able to develop more as you get into some sessions here over the next day or so. I do want to start with to me, is a bit of a sobering point, in that the number of dairy farms in the United States continues to decline. And this is not just something that started in the last few years. This has been going on for a number of decades. If you look at last year's data, the number of dairy farms were down to just over 31,000. That was a loss of over 2,500 farms last year. You go back just a few years ago, 2017, there were over 40,000 dairy farms. And last year's decline of 2,550, almost 40% of that decline came out of just two states. Wisconsin on its own lost over 600 farms. That was 25%, roughly 25% of the loss in the US. And in Minnesota, it was another 380. So the upper Midwest really did suffer. And in general, I would call the traditional dairy areas with the small farms, Midwest, Mideast, Northeast, were the ones that lost the most farms last year. The one that to me is a bit scary looking out, if you just trend that out over the next 10 years, or out to 2030, the last year's rate of decline was 7.5%. If you use that same percentage decline out to 2030, there would be just under 15,000 farms, or half as many as there were last year. If you use the absolute number of over 2,500, it'd be down to only 6,000 farms. That's a bit apocalyptic. I don't think that's going to happen. But you can see that the trends here are that fewer and fewer farms in the United States. But if you look at the right-hand side of the page here, milk production continues to increase about 1.5% every year. Pretty steady goes back over the last 20 years or so. I don't see that changing. I think we're going to continue to see good growth, really where the milk growth is coming from large farms, mega farms, if you want to call them at times. 2014, the average herd size in the United States crossed over 200 for the first time in 2014. 2020, that was just under 300. Okay, so you can see how rapidly the increases in farm numbers. The good news when we talk about demand is, while we're producing more milk every year, we're also consuming more milk, not only domestically, but for export markets. Cheese has been, to me, the star. Go back over the last 30 years, the total production of cheese and whey products have doubled. It's even more dramatic when you look at milk powder production. You've seen production triple, and 50% of that, or over half of that's going into export markets. So very positive in terms of where we're seeing that go. The not so good news on demand is fluid milk, and maybe not from a farm milk standpoint in the Pacific Northwest, not as important as other areas of the country. But fluid milk demand continues to decline. Go back, let's call it, say, 20, 25 years ago, 35-40% of all milk in the United States went to fluid milk use. Last year, it was, I think, 20%, or I'd say even probably under 20% now. And you can see it, on that bottom right-hand graph, one of the problems, it gets highlighted here, is up until about 2010 or so, the total volume of fluid milk sold every year was roughly the same, call it 54, 55 billion pounds of milk, year after year after year. Not a lot of variation there. But after 2010, we've seen that not only on a per capita basis drop, but actual total pounds drop. So we went from mid 50s down into the mid 40s. So you roughly lost the better part of 10 billion pounds of milk in fluid milk. And why is that? well, you can say competing beverages is one of the main ones, but there's other longer term structural issues with fluid milk demand that we've really seen that come through in decreasing sales over the years. And again, I don't really see that changing. And as I said on the a couple pages ago, don't want to dwell on it too much. But one of the problems that we have here in the U.S. is with the federal milk marketing order system. It was set up to regulate local fluid milk markets a long time ago, and we're in a national and really global market for dairy products, and it's really doesn't work that very well to be able to regulate a global dairy product market. So some changes need to be happen there. Hopefully in the 2022 Farm Bill or next couple of years, there will be some changes to address that. In terms of what drives milk utilization, I think there was some recent research by CoBank that talked about shifting consumer trends that have been impacting dairy, and these are not just in the last year or so. We'll talk about COVID and what COVID's done here as well, but I'd say just in general, we're seeing more growth in niche markets, and define those as could be organic, could be a GMO free, natural, pasture raised, grass fed, whatever you want to call it, and other things. And I think those are only going to continue and probably grow. And you probably hear, like Donna's talking, I believe tomorrow or maybe later today, probably talk about some of those things. And again, I don't see this changing. This is we're seeing more and more fragmentation and segmentation around consumers, and food companies are reacting to that. So as I talk about here about what's changing with food companies, what's changing with consumers, food companies are reacting to this. So they're introducing more products that are organic or GMO free or natural or what have you, plant-based, and that's again only a trend. I think it's going to continue, not here only in the U.S. but globally. The second point is that consumers they want more information. They can now go up and scan a QSR code in the grocery store and pull to be able to pull up and where did that product come from, see a picture of the farm it came from, see maybe information about the farm, see information about the plant. I think again more around sustainability, packaging, recyclability, all those things are going to be more and more important. And as we have the technology out there to do it, this is again only going to, I think, increase. And again, change is scary. This is going to be something that not only dairy but other food segments are going to have to address. But again, it's whether it's retailer or in a restaurant, I think you're going to continue to see more of this. Now, I think the good news is, depending on where you're located, if you're closer to those consumer centers, bigger cities, you may actually have the ability to reach out directly to consumers, whether that's through farmers markets, whether it's through direct selling, maybe on farm processing. Like we're seeing more of that, not only in dairy but in other ag products in the U.S. where farmers, I think particularly small to mid-sized farms, they don't want to compete in the commodity market, and they're able to invest on their own processing, and they make farmstead cheeses or bottle their own milk or make yogurt or different vegetables, whatever it is, and there's a demand for that. And I would say that is one thing that's really been highlighted in the last year through COVID is even more interest in where food comes from, more local. Again, local, I think, is the word you hear more and more of. I think that only continues as well. And the last point I make here is that you're going to see more of that going forward, and I see that as I deal with the food companies, not only here in the U.S. but globally, that while the companies go out and make what looks like demands to farmers or producers or their suppliers, in some cases they're saying, hey, this is what we need, this is this is, or the consumer wants, this is what we need, and by the way, we're going to pay you a premium for it. And you see that in some of the niche markets already, and I think going to continue to see that in other areas of some of these, whether it's sustainability or you name it. I think you're going to continue to see that some of the big companies come forward with ideas and make it, whether paying a higher price for what they're buying, or maybe even make investments on farms. And again, we've seen that some good examples like a Danone General Mills that are, that make investments right directly onto the farm. And I think another area, which I won't get into too much here, but I think is just starting to get explored, is, particularly with the focus now on climate change, and in the new administration, all the money being put behind that will be renewable natural gas on dairy farms. I think here some people talk about how at some point, particularly on some of the larger farms, but even maybe all farms, dairy farms, other livestock, that the energy produced off of them could be as valuable or more valuable than what they're producing today. So I think that's going to be an interesting dynamic moving forward. As we look at the export market, this is overall has been a good story. And if you look at the lower left-hand graph here, you go back in the 1990s, the U.S. really wasn't much of a player in the export market. And what little the U.S. did export back then was either subsidized or really not of much value. And it really changed starting in about 2006, 2007. And since then, the U.S. has become more of an important player in the global marketplace. And exports have become a much bigger part of the U.S. dairy industry. Last year, we had around 16% of milk production being exported. Said another way, that's about 1 in every 7 days, or 1 day a week, milk production is going to the export market. So that's a good ways from where we were a decade or two ago. The maybe a little more concerning, if you look at that lower left-hand graph, it's kind of topped out here. We really haven't seen a lot of growth. We saw good growth from the 90s into the 2000, 2010. Then we've kind of just leveled off here. So we've kind of been stuck around this 14 to 16%. In February, it was over 17%. So that's good. I don't think it's probably sustainable. But the charge here has been, particularly from U.S. Dairy Export Council and others, how do we get to 20%? What needs to happen to get up to 20%? So there's definitely opportunity here and a need to grow or continue to grow that. But how do you do it? To me, one of the more interesting aspects of where we're at in our exports is when you compare the average value of what the U.S. is exporting relative to the Europe or New Zealand. That's the lower right-hand graph here. And I think as I do presentations like this over the last couple of months, I've been using this. And to me, this is a pretty telling graph on really the need for the U.S. to do more when it comes to innovation and addressing global buyer needs. The red, if it's probably a little too small to read, but the red line, which is the top one, it goes across the graph, is the average value of the European dairy exports. The gray line that's just below that is New Zealand, and the blue line down on the bottom is the US. And that's a pretty stark difference of how much lower the US average export price is relative to Europe and New Zealand. And why is that? Well, the US is largely exporting kind of low value commodity products, non-fat dry milk, whey permeate, other dry whey, sweet whey powder, as well as some cheeses and really not much of anything else. That's the main volumes there. New Zealand and Europe also have those commodity products, but they've also, I call it, strategically invested in producing higher value products. So what they're able to do is they're able to make infant formula grade milk powders or whey products or UHT milks or lactoferrin or whatever other milk or whey fractions, especially cheeses, and they get a lot higher value for those. And what they're able to do is they pay their farmers a higher price. So I think that's, as I'll talk about here as I wrap up, that's one of the size of the prize is that if we see U.S. dairy companies and processors innovate and invest and produce higher value products, they're able to then pay more money for milk. And for the farmers on the call on the webinar here, that's definitely what they want to see. This is the I mentioned early on about where one of the big challenges are, or is for the U.S. dairy industry, and it's around trade agreements. And this is a chart that the U.S. Dairy Export Council provided, and I think to me is a pretty telling summary of where the US is relative to Europe and New Zealand and Australia. And the chart here shows a number of the main markets across or down on the left-hand side. So you got Mexico, Canada, China, South Korea, a number of other countries. And then across the top, you've got the US, Europe, New Zealand, and Australia, where you see the red triangle or red or diamonds there. That's areas where, in countries where some sort of free trade agreement is in place, and where those countries have some sort of preferential access or pricing. The ones that are kind of a goldish orange are FTAs or free trade agreements that are in negotiation or in process. And then you can see where the blanks are. The bad news is there's a lot of blanks for the US, and I put X's over them. And those are important countries: China, Indonesia, Malaysia, Vietnam, Thailand, Mercosur. Those are big countries, important countries going forward. What this means for the US is when we go and try to compete in those countries, we're at a disadvantage. That other countries have a preferential access, they've got lower tariffs. In the case, and we'll talk about this on sustainability, where you've got some of the countries, say, Europe in particular, that are basically going in and writing the rules, writing specifications, and that then becomes, it's not just their rules, it's becoming everybody's rules. So this is a real challenge as we look out over the next, not just month or two. This is a multi-year, longer-term issue. Now, I think maybe I hopefully is something that the Biden administration is going to address here. The Trans-Pacific Partnership, the TPP deal, that the U.S. was at least part of the negotiation and pulled out of back in 2016, 2017. Maybe the U.S. Has, at least there's talk of maybe rejoining that. That would be, I think, a big deal for U.S. in general, specifically for dairy. A number of the countries that we have listed here that the U.S. doesn't have access to, would be included in that. So I think that would be definitely a positive. Not going to happen in the next month or two, but something to definitely watch out for. As I mentioned early on, this is not just a presentation about COVID and where things have been at for the last year, but I would say as we look back over the last year, we have seen some changes in consumer trends that have accelerated because of it. For the most part, you've seen just it's interesting you talk about, I'd say used to have people talk about the consumer. And Tom Gallagher at DMI, would say, started saying, several years ago at least, there is no the consumer anymore. There's so much segmentation around the consumers anymore that you can't just produce some big bulk product and a bunch of people are going to buy it. That there's more and more segmentation around consumers, and I think we've seen more of that here. Some of the examples that these changes in preference. The nutrition angle has really become more important. You look at dairy. Dairy's had a good story to tell over the last year through the COVID, the pandemic. China specifically has been fairly aggressively promoting dairy products as boosting the immune system. So we see the nutrition aspects being pushed for foods. Convenience has definitely been, it's something even before COVID, but has accelerated here as well, as improved convenience, more meals at home. Online, I think you'll hear more about that here over the next day or so, that online purchases, both grocery and restaurant, are have become more popular. I mean, think back, pretty much a year ago, think about going to the grocery store. I mean, that was almost a life and death sort of experience. It seemed like that you were going into with other people, that it was very scary. Obviously, it didn't turn out to be nearly as bad as what we thought at the time, but that has definitely accelerated online purchases of grocery as well as all the restaurant stuff. And then, as everybody or lots of people have been working from home, they're eating more snacks and more in between, between meal sort of things. So those are probably things that were happening before, those trends are just going to continue going forward. What we've seen in terms of responses from grocery stores, restaurants, and others that are supplying food out to the consumers, At first, at the grocery retailers, you've seen more focus on their private labels and moving private labels, their own store brands into new categories, ones they really haven't been in as much before. Definitely doing more around promotions and trying to keep people coming to stores. I think you'll really see that step up here over the next several months as there's a shift. I think we're going to see a shift back to people eating out more, and just by simple math, if you go out to eat more, eat at restaurants more, you're going to eat at home less, which means grocery store sales probably drop off. So grocery stores are going to try to keep people coming in there as much as possible. They've seen the best year probably ever in the last year for retail grocery with 10, 12, 15% growth. And dairy's done quite well in that as well. So how do you keep people coming into the store in this post-COVID world, so to speak? Online, already talked about that. I think the grocery retailers had to figure out really quickly how to have an online presence, ordering online, personal shoppers, all that sort of stuff. And the restaurants, the ones particularly had drive-through and carry out and delivery, have done quite well. Other ones had to figure out how to do that. Ghost kitchens, maybe a term that you're not that familiar with, but we've seen pick up here in the last year or so. I started several years ago. These are essentially restaurants that are just basically a kitchen or maybe an industrial kitchen with several restaurants in one space. There's no sit down. There might not even be hardly even a carry out area. These are ones that you got Uber Eats or DoorDash or whoever that will deliver food out of these quote restaurants, even though they really don't have any physical presence as a restaurant. So I think we'll probably see more of that going forward. And as I said, just overall, just a more fragmented consumer base. As we look at what some of the food companies have done here over the last year, again, I think these are things that probably could have happened or should have happened, but the COVID pandemic pushed them into things that they normally wouldn't have done. One I talked on the prior slide about the nutritional benefits of products, and I think that's these are pretty tactical responses. One of the I think important things that we've seen over the last year, it really started last spring, is looking at different products. And a lot of grocery stores just figured out that they didn't need to have 4 different varieties of baked beans or some things that just didn't move very fast. You think back in the really about a year ago when it was called peak hoarding. My brother's in the food business too, joked that if that'd be the time for a grocery store manager to walk through the store, and if there's a lot of stuff sitting on a shelf, you could discontinue it, because if it wasn't selling last year, it's probably never going to sell much. So we've seen that happen. Food companies have been reduced, not only food companies, but other companies in general have been reducing the number of products they're offering. I've seen that in appliances and other areas as well. So it's not just food. The supply chain risks were real, still real, with all the shipping issues that have been going on here in recent months. So we've seen food companies, particularly global food companies, shortening their supply chains. Maybe having a global supply chain wasn't such a great idea. Maybe they need to diversify and have more local or regional suppliers, or in the US have more, same thing, local or regional suppliers as well. And then just in general, there's always a need to reduce costs, but probably even a more focus of that here in the last year. Those are the kind of, I would say, the tactical things that happened in, over the last, 6 to 12 months or so, kind of responses to it. But then there's some longer term strategic things that are happening too. And we're seeing a fair bit of restructuring and reorganizing businesses. Danone is probably one of the most high profile ones in the food side, but you'll see others, have seen others, you'll see more of those going forward. A shift in channel focus. So companies that maybe were heavily weighted in food service thought, given what happened here last year, maybe that's not such a great idea, and shifting back over, maybe a little more exposure to retail or maybe vice versa going forward. Companies, particularly, we saw that last year in dairy, that some processors just weren't very flexible to be able to move between different products, different packaging sizes. So we've seen some processors make more investments in manufacturing capabilities, whether that's adding lines, adding plants, what have you, to be more flexible. And at some point, the plant rationalization or seeing redundant assets. We've seen several dairy plants close in the last year. There'll be more of that happening as well. And as I mentioned, a global or regional versus a local sourcing model. I think that's going to be another challenge or change here going forward. In terms of what customers want, and I would say this is for, we could talk about dairy, we could talk about almost any product, but specifically for dairy, customers, meaning, the buyers, the global food companies, food companies in general, really look at, I would say, three basic metrics on how they evaluate their suppliers and what they want, which is cost, quality, and service, and not necessarily in that order, but those are really the three main things historically that a buyer or a customer would look at from their suppliers. But what's changed in the last few years is innovation and sustainability have become more important for a number of companies, particularly the global food companies. And as I said, COVID has brought some things forward that we really haven't talked about all that much before, but the supply and price surety, normally you would say this wasn't really an issue. You were pretty much guaranteed you were going to get your supply. That didn't happen sometimes in the last year. So there is more concern about just supply chain surety, making sure you would get your stuff that you ordered, and having suppliers, either multiple suppliers or suppliers that were more flexible in being able to do that. Again, not just in dairy or food, but in general, there's been a move over the last number of years to decrease inventory, working inventory at companies, which is money invested. There's been, a lot of focus on reducing days of inventory and the amount of stocks of stuff that companies would make or would hold on to. But that proved to be pretty important last year. The just-in-time inventory was not a great model when you thought you were going to have 2% growth in your sales, and all of a sudden it was 20 or 30 or 50% growth in sales, and all of a sudden you got out of stocks and back orders and everything else. So I think that's going to be that is going to be, it already is changing in terms of how companies view just-in-time inventory and how they manage their inventories. And also just price surety, locking in prices for longer time periods. And especially that's important when you look at some of the global food companies on their price exposure. Around innovation, again, you'll hear more of that as over the next day or two. But I think, we've seen, there's going to be a need for more and more new product development, improvement to existing products. And again, back to kind of cost savings, but just overall process improvement and cost savings. And then finally on sustainability, there's some interesting comments on a study I did last fall from buyers, not only here in the US, but globally around sustainability. And one was, so I'd say one of the leading global food companies on the topic of sustainability made several, a couple interesting comments when I was talking to them. One was when they come and visit a farm, they don't want to, or one or two farms, they don't want that just to be the showcase farm or the model farm for their supplier. They want to go to a couple farms and know that every farm that is providing milk to their supplier is meeting those the criteria that's being laid out, or said differently, they don't feel comfortable with the fact that they get shown a couple model farms or showcase farms, but they don't get to see the other 100 farms that are shipping milk into a plant or shipping something into one of their suppliers. And their challenges, they want to know, they have the assurance that when they see 1 or 2 or 10 model farms or showcase places, that all of their farms, all those supplier farms, are similar to that. And there's not a wide range, which I think that's going to be a bit of a challenge here for US suppliers to be able to do that. It's doable, but there's going to be a bit of a challenge there. The other piece of it is it's not just at the farm level. The farm has obviously a lot of influence in terms of sustainability, but also plant operations, packaging, logistics, transportation. It's interesting. We talk about sustainability and all the focus on something on the farm or packaging, but then we're shipping product 2,000 miles or 5,000 miles. I think there's a good conversation to have around the sustainability impact from that. If we look at what our competitors are doing, and by competitors I mean not only dairy companies but other non-dairy or food companies. If you look at dairy, Arla is one of the largest food companies or dairy companies in the world. They're a cooperative based over in Europe. They've invested over $80 million over the last 5 years. They built a couple innovation centers in Denmark. If you look at Fonterra in New Zealand, they have a R&D center that has around 280 people that work there, over 130 PhDs. They've got lots of patents. They've got a very diversified staff. They've got other investments and collaborations with other universities and people around the world. So they've done a lot. Danone, they're tripling the size of their plant-based products by 2025 to over $6 billion. So that's where say our competitors, when I talk about U.S. dairy, that's what some of our competitors are doing. And then if you look outside of dairy, Oatly, if I would have talked to you 5 years ago, you'd been scratching your head. I don't even know what Oatly is. Well, it didn't exist. This just started in 2017, and already it's the second most popular plant-based beverage in the United States, and sales were up over 200% last year. So just a crazy story about oats. For those of us who grew up on farms and used to feed oats to cows when I was a kid, all of a sudden it's the second most popular plant-based beverage that we have here in the U.S. And then I think the next horizon is Perfect Day and other food technology companies and products that are made through cell-based, cultured, whatever word you want to use. Those are coming as well, and there's a lot of innovation around that. And it's at some point, maybe soon, is going to be a threat to dairy that we need to be able to figure out how to address. In terms of what does the U.S. need to do, I think the U.S. needs first to become more consumer-centric. I would say over time, the U.S. dairy industry has had more of a focus on pushing milk and supply forward instead of going out to the consumer and figuring out what the consumer wants and provide, produce and provide what that product is. So to get there, U.S. dairy companies, food companies need to invest in innovation, new product development, processing, you name it, everything around innovation, more R&D, more people. It's not cheap, but I just gave you some examples of our competitors, what they have done and what they continue to do. And this is an area that, again, admittedly, the U.S. is behind in. Research I did there last fall, one of the quotes I got from a buyer from a global food company over in Europe said that when you think of innovative dairy companies, you do not think of the U.S. I'm like, wow, that was kind of a strong statement. But and I've even talked to several people here in the U.S. at dairy companies that will say something similar. So again, definitely an opportunity area, but is a challenge. I use the term going on offense here. Maybe that's a little too strong, but I get a sense that the U.S. dairy industry's been more defensive around sustainability, and that somehow we need to catch up and go on offense. I think there's a good story to tell here. So hopefully we can get to that point. I think there's a big opportunity right now, given all the money that's coming out of government for infrastructure and a number of other programs for the U.S. dairy industry to kind of help foster government policy to enable changes. I think it's a great opportunity with Secretary Vilsack, given his prior experience in government, his experience in dairy with U.S. Dairy Export Council. He has been very passionate about sustainability and agriculture and farms and what they can do to address climate change and some of the things that there's going to be a lot of focus on here over the next few years at least. So I think this is a very good timing, and hopefully the U.S. dairy industry can take advantage of that and benefit from some of these new policies that are being put in place. As I said early on, kind of gave this away, but to me, the overall size of the prize here is you create more value. You create more value for dairy products, you create more value for milk. And when you do that, you end up with higher milk prices. So again, for the farmers that are on the call, that this to me is an important point, that we create more value, we create more competition for milk from different plants. And when you do that, you get higher milk prices. So just as I wrap up here, leave you with a few closing thoughts. And again, I think this hopefully will generate some discussion as you go through the rest of your meeting or conference here. talk about some of the macro trends that I went over. How will those impact you? How will they impact the dairy industry in total? As kind of laid out some of the ideas that I have. What do you see as the biggest threats that are out there, as well as opportunities for the dairy industry? And there are a lot of them, a lot of both. But how do we turn some of those threats into an opportunity? I think there's good examples of what companies and how people have done that. I started out by showing you the graph on the number of dairy farms, and this to me is a trend that I've seen for several years, and I think it only continues. I think the conventional dairy farm sector in the United States is moving to a point where organic is maybe today or has been, where you've got a large number of small farms and a small number of very large farms, and most of the milk comes from those very large farms. That doesn't mean to say the small farms, a lot of the small farms aren't going to survive. I think they can survive, but I think they're going to have to do some things differently, whether that's around sustainability, supplying local markets, niche markets, what have you. Maybe it's genetics. There's a number of different opportunities there, but I think it will have to change from where we've been at. And I think the real challenge will be kind of that mid-sized farm. They're too big to be niche, but they're not big enough to be a scale producer. What do those farms do? And there are pros and cons of each of those. I think, as we've talked about exports, that this is only going to grow in importance. That the U.S. is going to have to continue to be and grow in the export market. But I think an important question is how's the U.S. going to position itself in the export market? I'd say today and where we've been over the last decade or so, the U.S. has been viewed as a low-cost supplier of commodity products, and a very good one. Again, I talk to companies in Europe. They will say when it comes to commodity production, the U.S. can't be beat. So that's a good thing. Is that what we want for our future? Or do we want to produce more value-added products? Maybe at smaller volumes, but get higher margins and higher prices for it. And some will say, well, can't we do both? Well, maybe we can. But I think this is an important question to address. And then finally, how are dairy farms and processors going to meet those, all these changing and increasingly complex demands from consumers, whether it's new products, packaging, sustainability, all the other claims and marketing claims along with it. How do we do that? So lots of challenges, lots of opportunities, and I hope this gives you something to think about as you go through the rest of your conference. And I'm going to flip that back over, and hopefully we have a few minutes here for any questions.
Thank you very much, Mike. That was wonderful. We do have a few questions. We'll jump right in. I'll just grab the first one that I see here from Kazamek. You talked some about Europe and New Zealand's weighted average export unit pricing. In what areas do you see the most potential for innovation in the U.S.? Who do you see funding these potential products?
Very good questions. The opportunities, I think probably the difference is, and the comments I've heard is that Europe is better in dealing with milk components, where the U.S. is not as much. So that means fractionation technology, so more around UF, RO, fractionations of whey proteins, milk proteins, and doing more and more specific things around that. I think that's one of the opportunities. Who pays for it? Well, it's processors. If you're a cheese plant processing whey, those are the ones that have been making that investments. Milk powders have been probably more on the co-op side, but I think good examples have been Cayuga, Idaho Milk Products, Valley Milk, groups of farmers investing in doing their own plants and making their own things.
Are independent farms also shrinking, closing in the EU, New Zealand, similar to kind of the trend you're seeing in the United States?
For the most part, yes. I mean, that's it's not that is not unique to the U.S. I could show a chart of dairy farm numbers in Canada, and it would look pretty much the same.
Well, thank you again, Mike. We're out of time for the Q&A session, but that was a great presentation. We really value your time. Thank you so much for being here with us today.
Okay, thank you. Enjoy the rest of the conference.